And to tell us more about what we can expect from the global economy as well as the Korean economy, Professor Yang Jun-sok from the Catholic University of Korea joins us in the studio today. So good to see you.
Happy to be here.
All right, so last year was the 10th year since the start of the global financial crisis, and economists are expecting global economic growth to continue this year on the back of the recovery momentum that we saw throughout last year.
Yeah, if you look at the global growth figures for 2015 and 2016, they were really disappointing, lower than 2013 and 2014. Now, as you mentioned earlier during the report, 2017's growth rate has gone up, and this year they're expecting a rate as high as 4%. Now, what hit Korea even more than the slow global growth is reduction in value of exports. During 2015, the global value of trade went down by 13%, and in 2016 it went down by 3%. On the other hand, numbers are not completely in yet, but in 2017 it looks like the global trade will increase by 3.6%, and that played a big role in raising our exports so much this year. Now, as far as the Korea is concerned, everybody's expecting a growth somewhere around 3%.
Right.
That's slightly worse than what we had this year, but I think people are taking a bit of a conservative approach because, well, Korea had reduction in exports for the last 2 years, so we started from a fairly low basis. That's partially why we had such a high growth in exports this year. We don't think the growth in exports will be that big next year, but given the global growth, it'll probably increase. Government is expecting about 4% range increase in exports next year, and well, this is the first time in a long time that every major region in the world is feeling optimistic. So hopefully we'll get back to the pre-global crisis path, and hopefully things will return more to normalcy that we saw before 2008.
And also, we've been hearing some good news for the local stock market, and some are even saying that this year will be the KOSPI 3000 era, despite several risk factors. What's your outlook on this?
Okay, well, I'm sort of mixed on this.
Okay.
Because exports have been doing so well, because Samsung Electronics in particular has hit highest sales that they ever had in terms of semiconductors, I think there's some definite factors which leads to higher stock prices. On the other hand, we've been hitting historical highs, and I don't think the economy is that good yet. Okay. We talked about how the global exports are picking up, but Korean domestic economy is not doing very well, especially consumption, so I'm not sure if we should be at a historically high levels. And in addition, well, the KOSPI and stock market went up about 25% last year. If you want to hit KOSPI 3000 and KOSDAQ 1000, it'll have to rise 20 to 25% again this year. I think that's a bit too much to hope for.
Okay.
So I think there will be an adjustment sometime during the year, but as usual with economists, we don't know when.
Now, the Korean won also slipped against the U.S. dollar on Wednesday, that is, after peaking to a more than 3-year closing high on the previous session. So what's your outlook on the $1 exchange rate this year?
Okay, well, if we're going back to, say, the 2013-2014 era, Korean won was stronger. So in a sense, the rate seems to be going back to that sort of range. Now, it's getting there a bit faster than we would like, but we're not reaching historical high levels for Korean won. We've survived this exchange rates in 2013, 2014, and in fact, we actually had better trade figures back then. So I don't think it's too much to worry about, but as I mentioned, it's not exactly the level which worries me, but perhaps the speed, because the small and medium-sized enterprises, they cannot handle these type of quick changes in exchange rates very well. But large companies, I think, are used to this.
It's always the pace that matters, right? Okay, well, the finance minister and the IMF and the OECD are all expecting a 3% range growth for Korea this year. And there are also high hopes that the country's per capita GNI will exceed the $30,000 US mark this year.
Okay, well, it probably will hit it, but I'm not sure if we should put too much attention on it. If you look at how the per capita GNI is measured, it's usually affected by three main variables. The first is the exchange rate. And, well, if $30,000 is reached by strengthening Korean won, well, it's good for telling your friends abroad, but it's not really good for purchasing anything denominated in won.
Right.
So if you buy a lot of imports, then maybe you're going to be slightly better off, but if you're buying Korean goods, it's not really going to matter. Then the second factor is population. You don't really want to reach $30,000 by having reduced population.
Right.
But that's not going to be too much of a factor. If we reach $30,000 because we had high economic growth, high real GDP growth, I think that's the best picture that we can get. But I'm somewhat afraid that perhaps we'll get there by exchange rate rather than growth.
Now, this year, I think we're expected to see some numerous pro-labor policies go into effect. So what are you expecting in terms of President Moon's J-nomics in 2018?
Okay, well, let's take a look at some of those one at a time. First, the minimum wage. It's going up by 16.7% this year. There's a lot of concern that it's too large. I happen to agree that it may be too large. Now, in the global economy, there hasn't been that many cases where you had an in-depth study of minimum wage going that high. Usually when you have an increase in minimum wage, it's the rate of inflation plus the increase in labor productivity, plus a little factor there to maybe adjust for redistribution of wealth. But 16.7% is way beyond that. Now, usually when you have increases in minimum wage like that, people are worried that there's going to be reduction in jobs, but usually if you have a relatively moderate increase in minimum wage, you didn't really see a lot of reduction in jobs. But because this rate increase is so large, we're sort of working in a mysterious territory. There's not that many studies dealing with such high increases in minimum wage. And one concern is, well, some studies in Seattle, which had a comparably high increase in minimum wage, show that unskilled labor were being replaced by skilled labor, because if you're going to pay them high wage anyway, you might as well get people with experience.
Right.
So if Korean increase in minimum wage works that way, then it will not help those people who originally were meant to be helped by the increases in minimum wage. So we're engaged in a big experiment here.
All right.
And then there's various tax measures to get firms to hire more people. Usually you get tax breaks if you invest in capital, but one of the special things about J-nomics is that they're going to give tax breaks to people who create jobs. The sort of problem here is that most of the tax breaks are only going to last 1 to 2 years, while they want the companies to hire these people on a permanent basis. So a lot of people are wondering whether this 1 or 2 year tax break will really be effective in creating more full-time jobs. And then you have more benefits for workers. And again, coupled with rising minimum wage and more benefits means that there's more burdens for businesses. So they may try to just get rid of a lot of labor altogether. We see that in some of the convenience stores or in fast food restaurants where they don't hire people to take orders anymore. And again, so this is going to be a bit of an experiment, because we've never had this case where so many benefits and increases in minimum wage have come so quickly in a short period of time.
It's like two big things coming all at once.
Right.
Right, all right. Well, now looking outside of Korea, I think we can say one of the biggest external factors that could affect the Korean economy is the U.S. Fed and its rate hikes this year. Okay, well, during the last Fed meeting, during their report, well, in the back they have things called a dot chart, where each Fed member estimates how many times interest rate will go up, they think, next year, or rather this year. And the average came out to be 3.
Now, the problem with these dot charts is that they're almost never correct. The Fed always emphasizes that they're going to make the decision on the data that they see in each meeting rather than any kind of pre-planned increases, excuse me. Now, the new chairman of the Fed, Powell, is known to be a sort of a disciple to Janet Yellen, so he's a dove. He doesn't want to raise rates too quickly, and I think for the most part, the Fed doesn't want to really raise the rates too quickly. But there's some wild cards here. The first is that President Trump has the ability to assign more members to the Fed. There's a lot of vacancies that he can assign people to, and if he assigns a lot of hawks, then the interest rate might go up faster. And then the second factor is U.S. is already working very close toward full employment. In fact, some economists believe that U.S. is already beyond full employment. That means there's a very good possibility that the economy will overheat, and in that condition, President Trump had a tax cut this year as well.
Right.
And now in the Fed report, they didn't think that this tax cut will have a lot of effect. But if it does, and if the U.S. economy does overheat, then they'll be forced to raise the interest rates faster. Right now, I think 3 is a reasonable bet, but there's a risk to the upside.
Now, there's the upcoming negotiations over amending the KORUS FTA, which is coming up tomorrow on Friday in Washington. What can we expect on this front?
Okay, well, there's some good news and bad news. Let's start off with the bad news.
Okay.
The bad news is that they're probably, at least in the first few meetings, going to be very aggressive. The USTR, when we look at the NAFTA negotiations, they've been trying to negotiate very aggressively. They've been throwing out initiatives that Canada and Mexico will not accept. For example, having NAFTA last only for 3 years at a time. So every 3 years, they would have to reapprove the FTA. Now, that will not work for anything like investment, because no company will want to invest in a foreign country if their rights are only guaranteed for 3 years. So they're probably going to come up with very aggressive postures, at least for the first few meetings. We know that they're very interested in opening up the Korean automobile market. We know that USTR Lighthizer has been very concerned about Asian companies exporting to the United States goods made from Chinese steel. So he feels that China is exporting its steel indirectly through other Asian countries' exports, including Korea. So he'll probably want to do something about that. There's probably going to be some pressure on certain services like legal services and financial services, because U.S. is always interested in that. They're also probably going to be very aggressive about agricultural market opening.
Right. Sensitive part, right?
It's a very sensitive part. The Korean trade representative said that he's not going to accept any additional liberalization there. But agricultural sector is known as Achilles' heel for Korea virtually globally. So they know that if they push Korea on agricultural market, they'll either give up something on some other market, or they'll give up they may be forced to give up some liberalization in the agricultural market, which is good for the United States because they have a comparative advantage there. So I think you have to expect a very aggressive first few meetings by the Americans. But on the other hand, I told you that there was a bit of a good news. Usually, if there's a major renegotiation, USTR has to inform Congress 90 days before negotiations start. They did this with NAFTA. They apparently have not done it with Korea yet. So that may mean that they want to have this modification and amendment very limited in scope. And that means that we don't have to have these major wide-ranging renegotiation, just try to fix a little bit here and there.
All right, well, we'll keep our eyes on what comes out of the first round of negotiations on Friday. Thank you so much for coming in today.
Thank you.